Fed Chair Powell has saved the markets, it seems. On the day of recording here, the Fed Powell speech that everyone's been waiting for has finally come out, and Powell has confirmed that smaller interest rates are likely coming, and it could begin in December. Again, could is the key word, but he cautioned that monetary policy is likely to stay restrictive for some time. Until real signs of progress emerge on inflation, the Fed will stay the course until the job is done, he said in a speech in Washington, D.C. at the Brookings Institution. And it's very similar to the previous FOMC minutes, which came out stating that, yes, the Federal Reserve might stop doing 75 basis point hikes. They'll do smaller rate hikes, maybe 50 basis points, and probably even less, going down the road. But interest rates are still heading a bit higher. And we've heard a lot of Fed presidents, come out stating very similar things, right? Many of them saying that they expect rate hikes to be smaller, but, we're still going higher going forward. I think, what was that Fed chair? But one of them said that he's looking at interest rates between 6 to 8%, which got the markets a bit spooked. But then, other Fed chairs are saying, hey, we'll probably take it up to 5% and stop there. So the markets have just been very, very volatile here when it comes to inflation, interest rates. Is the Fed going to taper? Where's monetary policy heading? And now, we've heard from Fed Chair Powell, who's given us, I guess, a bit of, he's cleared up some of the issues here, but a lot of eyes and ears are going to be looking forward to the Wednesday, December 14th Fed meeting when Powell gives his press conference, when the Federal Reserve raises interest rates. Is it going to be 50 basis points or is it going to be 75? It does seem the market is reacting already as if they are expecting a smaller 50 basis point rate hike. So you can see here, S&P 500 up, NASDAQ up, Dow Jones up. So all the markets are popping after just days of really not doing much. If you followed some of the early videos here on EQUITY.GURU or even read some of my market moment articles, some of you will remember that we broke out of these basing patterns. So back on Thursday, November 10th, we broke out here on the S&P 500. And some of you guys might know that the NASDAQ is a chart that I'm looking more forward to because of this double bottom W-shaped sort of pattern here, which tends to occur after a downtrend. It generally means a reversal is coming because the selling pressure is now exhausted. And we got that breakout on the NASDAQ, but just no momentum higher. And this is a daily chart. So each of these candles represent one full day of price action. We just could not continue that momentum higher, and it's largely because of this Federal Reserve news, and recently with this dive here, I guess you could say, the Chinese news as well about Chinese protests and lockdowns sort of spooking the markets once again. But you can see here now, after the Fed Powell speech in Washington, D.C., very, very large green candle for the day. And just technical wise, this is perfect, exactly what we expect. This was our breakout zone, the 11,550 to 600 zone. And as long as price remained above it, we're technically still in this uptrend, and this double bottom pattern is in play. So going forward now, there's two ways to usually play this, right? Either you buy at the support dips here, which some people have been doing here, not just on the NASDAQ, but on the S&P 500, essentially, playing this range, which has played out, right? This range has played out not just on the NASDAQ, but on the S&P 500 here as well. And you can see, we're already seeing a little bit of selling at the top of the range. So going forward, the smarter way, I think, to play this, if you didn't get out, if you didn't enter on the breakout way back here, is you wait for a close above these recent highs here. So you can see here, today we testing those highs. We still have a few, but we have like an hour left to go in the trading day. Similarly here on the NASDAQ as well, big move up to basically recent highs, but not making new highs. So wait till these highs are taken out, because there is a danger that if these highs are not taken out, you can just continue to range, and you know, you don't want to be the guy that got in thinking that breakout's about to happen, but maybe, and again, this is a maybe, right, that we break down rather than we break out. So I think it's very prudent to wait for a close above these levels here on the S&P 500 and on the NASDAQ, but technically the breakouts and the reversals are still intact. We are supporting, or we are basically reacting off of these support levels. We have the fundamentals from the Federal Reserve, I guess, but we will still have to wait till the 14th to actually hear from the Federal Reserve and see what they decide to do with interest rates, and whether they are deciding to have smaller rate hikes. Keyword again, folks, as Powell said, you know, we could start in December, right? So it's not exactly 100% that they are going to start doing 50 basis point hikes in December, but I think most of the market is already pricing that in. If you look at the Fed futures, the CME Group Fed futures, so I don't think the Federal Reserve is going to surprise. So right now, markets reacting quite nicely with this news, but technically we are still just waiting for the previous recent highs here to be taken out to sustain the momentum forwards, because if that does not happen, then we can continue to range as we have been doing for almost 3 weeks here, and potentially even break back down to the downside. So that's it for me, folks. If you enjoyed the video, give it a thumbs up. Be sure to subscribe for more market videos and technical content. And let me know where you guys think markets are going. Do you think the Fed is going to begin to taper very soon? And will that mean stock markets are heading higher? Or do you think we continue to range here and the Fed surprises and we break back below? Let me know in the comments below, and I'll catch you guys all in the next video.